At a time. It is Friday, May 20th. I hope you have a wonderful, wonderful day. It is time for your daily financial news. Lots of things to discuss, lots of things around real estate, around the consumer, around recession, all of this good stuff. But let's get started on the bottom of my whiteboard. Bottom of my whiteboard, it says Christmas in June. If you were with me back in December of last year, I highlighted that what would likely happen is retailers like Walmart and Target would see this wave of supply show up when they didn't need it. I strongly suggested instead of overpaying things in December that we just have a motion and move it to June. So lots of you are reaching out to me saying, hey, Michael, isn't that deflationary? Well, kind of. Right? The company has already paid for them. They will put these on sale, but they will blow them out eventually. Again, companies like Target, Walmart are sitting on the wrong inventory in huge numbers. I told you that was going to happen. You can't double order, triple order, not have it show up, and it eventually not be a problem. Again, something at one rental at a time that we called early, and it happened again. Something that hopefully you're starting to see is I'm always looking months down the road. I'm not here trying to call tomorrow. I am looking for trends. I am looking to put my family's money to work, and I don't really know about tomorrow or the next day. This, again, is just another sign that my economic window sometimes is pretty good. Let's talk about the housing market, because we got numbers yesterday that I expected. This is for existing home sales. What I'll say at the offset is, again, for people that haven't been watching me for a long time, we are going to have a crash. We are going to have a national housing crash, in transactions. It will be at least 25%. By December, I suspect the run rate of transactions to be in the mid to high 4 millions. And again, folks, last year we did 6.3 million. Existing home sales, we did 600 new homes. We did a total of 6.9 homes altogether. We will, one more time, have a housing crash in transactions. Now, we will not have a national housing crash in prices. There could absolutely be crashes, corrections in your buy box, in your city. But I'm here talking to a national audience, and it isn't going to happen. I believe, as you will see in a minute, let me get the number exact. We saw 14.8% price increase in April. For all the crash predictors, how does that taste? 14.8% to the upside. What I am willing to call is we are going to see a nominal. Remember, on this channel, I've given you some education. Nominal versus real. Nominal is just the math. Real is adjusted for inflation. We will have nominal housing growth by December, something around 4 or 5%. If you so choose to adjust for inflation, it will be flat. So again, housing crash in transactions, not in price. I am sorry. I get a lot of hate for that, by the way. Pretty crazy. So let's talk about the numbers. Existing home sales for April came in a run rate of 5.61. Again, remember, existing home sales finished last year at 6.3. We are already down 11, 12%. We are going down 25, more pain coming. Month on month, we are down 2.4%. More pain coming. Remember, these are April numbers. These are closed transactions. So what does that mean in real estate? That means the contract was signed in February, maybe early March. Why is that important? Because we had only seen roughly half of the interest rate rise. This is going to get worse. Transactions will crash. We were down 2.4%. It would not shock me by June. So the number reported in July, that's just how it works. So the July report for June, transactions won't be down 2.4%. They will be down 15, 18, 20%. It is coming. It is going to get worse. Again, national housing prices average 391,200. I should say median, not average. There is a difference. Median home price 391,200, up 14.8 as I said earlier. Inventory, it is building but building slowly. Just wait. It will get better. Inventory is now over 1 million. It's 1.03. We had been as low as 900,000. So up, call it 11%. There are some oddities in the numbers, but again, folks, I keep telling you this is coming. Oddity number one, the inventory mix. What does that mean? Well, would it shock you that the first-time home buyer homes, the ones priced between 100 and 250 grand, are falling? If you follow my channel, you know why that is. Insert Jeopardy music here. Just kidding. This is live. I don't know how to do that. In the end, it's because the move-up market is dead. We did the math with Matt, the mortgage guy. He showed you how his payment would triple. Most of you, your payments would double. Why would you move, double your mortgage payment for an extra bedroom? It makes no financial sense. Go buy bunk beds. That's what all of us are going to do. So again, the volume between 100 and 250 grand fell 29%. It's not going to get better, folks. That inventory is going to stay owner-occupied, not moving. Two, if they are there, they're going to rent it out. It's just not coming back. And now the price point between 500 and 750 grand, up 19%. The Fed broke housing. Everything I keep telling you, showing up in these numbers. Cash buyers, 25% of the market. Why is that important? They don't care about mortgage rates. Investors, you and me, 17%. No, wait. Yeah, 17% of the market. Folks, if you are following one rental at a time, I want to applaud you. I want to remind you over and over and over and over and over again. The market is coming to us. Don't rush. Only write great offers. If you are interested in real estate investing and you've only been looking in your market or buy box for a week, stop. You need 60, you need 90 days. Do the work. Also, recessions, bear markets are awesome for investors, especially in real estate. Lots of people are talking about crash in prices. I want motivation. I want sellers going, gosh darn it, I need to get rid of this thing. I will take terms. Hence, the 50, 40, 10 that I've been sharing for over a week now is amazing. So lastly, again, I told you this was coming and it drives people crazy. The first-time home buyer, normally 40% of the market. They were 28% in April. Why? Because the move-up market is dead. There's no inventory. If there's no inventory, there could be no buyers. Simple math. So again, the housing market is unfolding exactly as I have called. We will see what happens next month and the month after. Remember, inventory will go up. Transactions will go down. Prices will flatten out. We will see how often the crash people keep talking, because we will have a positive number every month this year. Some of you crash people were calling for a crash this summer. I'm sorry, 14.8% is not negative. It is quite the positive number. And oh, by the way, existing home sales, again, in April number, this will get worse, is up to 17 days on market. It was as low as 14. So watch out. Days on market up 20%. Come on, folks. It went from 14 to 17. It was not abnormal to be 45, 48, 50 days. So don't let these channels confuse you with percentages. Doing some research about movement, because I think we have seen, like California losing, Vegas, Phoenix, Texas winning, Miami winning, Florida winning. Looks like Phoenix is suffering the largest national inflation. People have gone out and calculated the inflation rate in the major metros. Phoenix leads the way at 10%. I'm guessing a lot of that is housing, rent, fuel, things of that nature. Probably air conditioning. It's hot in Phoenix. The lowest is San Francisco at just over 5%. Rents hit a national record. Rents are something I focus on because it is so underreported in CPI. CPI, when we reported 8.3, had rents at 5%. National rents now at a record $1,827, 1827, up 16.7%. If you correct, which I did this morning, if you correct the CPI at 8.3 and take out 5.1 and put in 16.7, you get 11.9%. With that one correction. 8.3, my ass. It's crazy. Jeff Bezos is backing a single family, I don't know, home application, technology, whatever you want to call it. Basically, you can buy shares in single family rentals for as little as $100 and get quarterly dividends. The company is called Arrived Homes, fractional ownership. I personally am not a big fan of this. I say do the work, find your market, get your own rental. But it's interesting, turning the rental home into an asset, almost like an annuity or a bond. It's kind of creative. We had some earnings out yesterday. Palo Alto Networks. I told you about Palo Alto Networks on Saturday. Go back and listen to it. I said Palo Alto Networks is the best of the best in cybersecurity, and I can't imagine that going bad. Sure enough, they blew out earnings and popped. Next, Ross Stores. Ross Stores was kind of a surprising pick, although I think they might be doing better going forward. Ross Stores missed, let me get this right, missed top, missed bottom, and lowered guidance. Ross Stores actually called out the Ukraine conflict. I could get it if you're a food company. I may be wrong, but I don't think Ross Stores is in Europe. I didn't check, but it did seem odd that they would, of all the companies, and I now have looked at 100 or so earnings statements, Ross Stores is the only one that I recall calling that out. It's kind of felt like a kitchen sink. Like, let's get all the excuses and throw them in and see what people believe. If you're following one rental at a time, I want you to know that I believe the goal is 4 rentals. We are heading into a recession, bear market. It is time to do great deals. It is time to learn seller financing. It is time to start the journey. All you have to do is get 4. 4 can change your life. 4 cash flow properties bought one a year, one every other year, will change your life. Stop watching the social media experts talk about hundreds and thousands and 50. Stop it. You get to 4, you've changed your life. If you are a parent and you have a new child or expecting a new child, something I strongly recommend you think about, get 1 rental per property. If you can, put a 15-year mortgage on it. By the time they are 18, you have college or entrepreneurship or whatever covered. I think a rental home purchase for your kid will do a lot better than whatever these other, 509Cs or whatever they were? I don't know. David Sachs from the All In podcast, the podcast I listen to every weekend. He says we are in a case for a very, very serious recession. One thing I do want to highlight about David Sachs is he is very focused on the Silicon Valley. It is where I live. It is the people I know. We are really in it. Valuations of private companies down, layoffs up. It is getting very interesting in the Bay Area. So David, as a venture capitalist, sees all of that up close and personal. Because of you, because of this channel, because of my group, to me, I can lift myself out of the Silicon Valley, out of tech stocks. I do not believe a recession happens this year. I think it's deep and dark next year. Again, I stand by my whiteboard playlist where I gave you my economic preview of 2022 and 2023. So far, it is unfolding exactly how I called it. Stephen Roach is out now saying that stagflation is his base case. Again, that is exactly what I called for 2022. It makes perfect sense. High inflation, not getting better. Again, I am way out in front of everyone. I think CPI goes up the next reading. That will shock everybody. I hope I'm wrong, but I think it's going to surprise people. It is going to go up. Going to go up. Deere was somebody who reported this morning. They missed on revenue. They hit on earnings. And they, where is it? Yep. And they raised forecasts because you know what? People are planting more, likely because of what is going on in the Ukraine. Pretty interesting. Lastly, China cut lending rates again. Folks, the problem in China, right? Housing market collapse, tech collapse, Starbucks, all of these things I have been telling you, it is not about the interest rate. You have broken consumer psychology. Your people believed that owning another house was their path to a better future. You broke that. They're not coming back. You can make interest rates free, and most wouldn't come back because they are talking about the collapse and loss and all of these things. So again, it doesn't matter about the interest rate. So again, let's go back here. We will have a housing crash. We will not have a housing crash. We will have a crash in transactions, not in price. Rents are going up, up, up. I believe they have to flatten out. We have more and more people making really unfortunate decisions. I want you to think about 4 rentals. If you are at 0, I want you to think about 4. That is it. If you're already above 4, the answer is 10. If you're above 10, do whatever you want. But I want to talk to the people at 0. I want to help you get started. Let's get from 0 to 1 and then 1 to 4. And then finally, I told you the Target Walmart thing was going to come. I strongly suggested, and you can go back and look, saying we should have Christmas in June. Folks, that is why. You can't triple order, have these huge backlogs, and not miss the season. It is all predictable. We are doing really good work at this channel. Like, subscribe, comment. Also, say hi. Let's get this YouTube algorithm going with comments. Say hi. I will do my best to get back to you. And here's a treat. Hey, Sonny. This little guy was by my feet the whole time. This guy's name is Sonny. All right. Take care, everyone. Bye-bye.